Fall in love with the problem you're trying to solve, not the solution. Those are the words of one investor who's doing just that. We're diving into the venture capital business with Burks Solomon. You're here in the Enterprise Zone at the NASDAQ. Hello, everyone. This is Jabari Young, senior writer at Forbes, and I am here in the Enterprise Zone at the NASDAQ, and we're joined by Burks Solomon. She is the co-founder and managing partner of venture capital firm Collab Capital. It's a VC firm based in Atlanta. Early stage companies they're looking for, and about 125 million in assets under management. Welcome to the NASDAQ. Thank you so much for taking the trip.
Thank you so much for having me.
This isn't the first time that you're here, right?
No, I don't think so. I think I have been here before.
Of course. I'm looking at all the things you've done in your career. It's like she had to have been here at the NASDAQ before.
Yes.
But listen, we're here at the stock market. So give me a stock, right? What has worked well for Burks Solomon? What is something that you may be interested in buying?
Yeah, I sold my business to Amazon in 2016, so I'm long Amazon. And also I spent a lot of time in my career at Alphabet or Google.
Yeah.
So those are two stocks that I am pretty heavy in, but also obviously always looking at NVIDIA to see what they're going to do. I'm, in the tech business, so really love the tech stocks.
Yeah. Not too many people can come on a stunt like that and say, I sold my business to Amazon. Right? It's like you sold your business to Amazon. That is a wonderful thing. I cannot wait to dive back into that part of your journey. But, here in 2025, so much going on. And we still have a few more months to go. But here we are in fall 2025, almost there. Almost there. What's been the music? What's been the soundtrack to your year? What's been keeping you creative, motivated, enthusiastic?
Yeah, it's been a big R&B year for me.
Yeah.
So I love Cleo Soul, Alex Isley. Some of the newer R&B ladies are doing it for me this year.
I love that. I love that. Did you doing any Beyonce? Anything?
I love Beyonce.
Yeah.
I'm
Cardi B's new album just dropped.
I haven't listened yet, but it's definitely
on R&B.
It's on my weekend playlist for sure.
Yeah, I heard nothing but wonderful things about it. I'm almost afraid to go over there. It's like, man, a whole bunch of women I've been seeing on social media have been giving it all the props.
Oh, yes.
And it's like, man, are guys allowed over there?
Yeah, I think so. I think so. As long as you have the right energy.
The right energy. That's what it is. That's what it is. Well, listen, you walk into a fifth grade class and he says, well, Miss Solomon, what is it that you do? Remember, it's a fifth grade class.
Okay.
What do you tell them? I give money to people and they give it back to me?
I invest money. I hope they understand that word, invest money, to help fuel people's dreams.
Yeah, I love that. I love that. Now, how much money, and they ask you, how much money do you invest to fuel people's dreams? What's that check size?
Check size is $1 to $2 million.
Okay.
And, we just raised our second fund so that we can do more of that.
Yeah, well, that's a perfect segue, right? You just raised $75 million in June, the second of your funds, and the first one was a $50 million raise. Limited partners include Kapoor Capital, Alphabet, Apple, Goldman Sachs, PayPal as a part of your limited partner group. Take me on the inside of Collab Capital's second raise, $75 million. If all of the money's been deployed, what are we looking at?
We have not deployed all the money yet, so we still have plenty of dry powder. We're looking for great companies. We have made about 10 investments out of the second fund so far. So we have plenty more investments to do. We'll make about 30 investments in the second fund. And we're looking for great entrepreneurs who are building what we call for shared prosperity. So thinking about things like the future of work, in particular economic mobility, and how do we get more people into high-paying jobs. We're thinking about the future of care. So really across all of healthcare, there are so many gaps in terms of access to care. So we're looking at how can technology help to close those gaps. And then community infrastructure. So that's a pretty broad category, but we're thinking about all the things that people need to thrive in communities.
Yeah.
Things like access to transportation, digital broadband, even climate falls into that as well.
Yeah. Anything on the education landscape? I have a 12-year-old now, and I'm looking at all these different apps that the schools use and rolling out. Great stuff. I mean, Power School's one of them. Anything in the education space?
Yeah, we actually started with a future of education thesis, and what we looked at was that oftentimes when you get to the classroom, there are already so many other things, root causes that can hamper a student's ability to learn.
Yeah.
So that's why we took a broader approach and a broader lens to look at what are the core things that would keep somebody from achieving the learning outcomes that we would want for them.
Yeah.
So education still does fall into that, but we really want to take a view on the root causes that could help or harm someone from learning.
Yeah, any out of the 10 that you've already invested in, is anyone that's standing out already or that you're extra excited about that you won't mind mentioning?
Yeah, they're all really incredible companies. We're super excited about them. I guess one that's really exciting right now is called Janta Power. So they're in the energy space. Of course, we know that energy consumption is going through the roof and we need more energy. So they're looking at, they've created a vertical solar panel structure, and working with airports across the country.
Yeah, and you also made an investment in a good friend of mine, Josh Aviv, and Spark Charge.
Yes, yeah, Josh has been, I think, on this program.
Yeah.
He's amazing. Out of Boston, they're doing incredible, having a great year. So we're really excited to back them as well.
What's exciting you about Spark Charge? Because, and I've still got to call Josh, because again, we have a new administration and the EV space isn't looked upon as favorable as it was under the last administration. So when you look at Spark Charge, we're still keeping you, from an investor standpoint, excited.
Well, I believe that electrification isn't going anywhere. I drive an electric vehicle, been driving one for the last 10 years, and I think that that's only going to continue to be the trend, regardless of what the administration says, regardless of kind of the waves up and down. I think that we'll continue to need power sources, and I think the way that Spark Charge is approaching it is a super smart company, super smart founder, and I think they'll continue to win.
Yeah, is the average check size still 1 to 2 million, or you're giving more in this?
Yep, 1 to 2 million in those first checks. Yep.
Okay, so, and then you have another one, right? Explain this business to me, because I've been pitched on this company plenty of times before. I've called people in the film industry, and I'm like, well, what is Film Hedge? I have no idea what it is. And I saw that was on your portfolio. I'm like, well, yes, now I got the investor coming up. Explain what Film Hedge is and what's keeping you excited. And is that still a portfolio company?
It is.
Okay.
Yeah, they're in the first fund. What we thought about in that investment and a few of our investments is that there's this idea of verticalized fintech. So if you look across every single industry, and particularly something like the film industry, where it's always been sort of a closed door in terms of who can be the producers, who can invest in films. But there's a lot of people who are really interested in that industry. And Film Hedge is kind of democratizing and making it more available for the everyday person to be able to put dollars behind films that they believe in. And creating a marketplace for that.
Is it a film financing company?
It is.
Okay.
Yep.
Okay. So how do they make money, and how do you make money off of that?
So they have done a really amazing job of finding great films that need that extra kind of last mile, if you will, to get done in production. And from those films, the films do well. Film Hedge gets dollars back into the door, and then obviously we're waiting. We're a long hold on the investment, but hopefully at some point down the line they either get acquired or maybe even go public one day.
And another company, Hairbrella, with Tracy Pickett, if I
Yes.
believe is CEO over that.
Yeah.
What are you seeing in this company that's keeping you motivated? I've had Tracy and spoken to her plenty of times before. Big fan of what she's doing. How is that space? I know it's really, really competitive.
Yeah, I try not to pick favorites in the portfolio, but Hairbrella is definitely a favorite of mine. It was our first investment.
I wonder why.
I am probably Hairbrella's #1 customer as well, but it was our first investment in Fund 1, and she has continued to perform year after year. She's actually one of the top revenue producers in the portfolio right now, and really has a deep understanding of her customer and developing for that customer. So she's amazing. I'm a huge fan of that business.
Yeah, love that. Listen, you raised, again, $75 million in June. I don't know how long did it take you to raise that money?
It took a while,
right?
yeah.
But still, $75 million. I believe it was another firm that I had on here, was Zeal Capital. They had a nice raise as well. And I'm looking at you two, and I'm like, wow, they were able to raise money in this atmosphere, right? If you had to give me one word on the challenge of raising money in 2025, what word would that be?
There's a lot of words I could pick. I think it really is just change.
Change.
Yeah. Nothing was the same between the raise of the first fund between 2020 and 2021, and the second fund between 24 and 25. Literally everything about it was different.
Yeah.
The market conditions were different. People's sentiment around Black founders and Black emerging managers, totally different. The fact that I raised the first fund primarily during COVID and didn't have to travel as much, that was different. I was on planes meeting every single LP this time around. So everything was different, and I will say it was hard, but I feel like it's what we needed in order to really solidify ourselves as a long-standing institution.
Yeah.
I feel like making it through raising the second fund in the conditions that we did says that we have staying power. So I'm excited that we were able to do it.
Well, venture capital, 2025 has probably been a tough year for venture capital, maybe over the last 2 years or so. I mean, listen, not too many companies are hitting the public markets, and that's taking things back. Family offices are re-examining, like, when are we getting our money back? And so not too many are putting into VC funds. But is it starting to get better? Do you see some light at the end of the tunnel, or it's going to be still more of a bumpy road?
I think I'm starting to see some glimmers of light. There are a few more companies going public, some liquidity coming back into the market. The thing that I'm seeing that I'm excited about is the change in mindset from the entrepreneurs we're backing. I think people are getting really realistic about the fact that, you can't raise on the same valuations that you may be used to be able to. The bar is certainly higher in terms of getting to those next rounds of funding. And I think the entrepreneurs who are choosing to start businesses right now are a lot more serious about the fundamentals and, getting the profitability and those types of things that we look for. So I think this is a great time to be investing. I'm really excited to be in the seat that I'm in, where we have capital to deploy and are able to continue to back great companies. But it's certainly a lot harder than it was.
Do you feel like it may get a little bit, easier because there's a new law under the Big Beautiful Bill, the tax and spend law, where it allows, limited partners to sell their shares in companies sooner on the secondary market, right, than the 5 years without any capital gains tax, right? I mean, that's very interesting regulatory policy. I know investors don't expect too much to change, but you see anything from that particular regulation that could help?
Sitting where I am on the very early stage side, I don't know if that's going to have too much of an impact in the short term, but we always are watching the bills and how things are changing to see, what impact it's going to have for us and for our LPs.
Yeah. What's been the biggest positive surprise of running a VC firm? Positive surprise?
Really being able to get in early with great people, great companies, and watch their evolution. You talked about Hairbrella earlier. I met Tracy when she just basically had a prototype of the first Hairbrella. And being able to see her now having hundreds of thousands of customers and, tons of amazing products and spotting people in the wild in the products, watching and being a part of that type of journey and that evolution. And we get to do that over and over and over again. That is so rewarding, and especially coming from an entrepreneurial background, having built businesses myself, now being on the side where I get to just support the dreams of the entrepreneurs and, use whatever experience I have to help them grow and scale. That's super rewarding, and I get to do it every day.
How about the biggest negative surprise, or something that maybe caught you by surprise when running your own VC firm?
I think it's kind of the flip side of the same coin, which is that I'm an entrepreneur, but I don't get to run the businesses. Yeah. So I can coach, I can, make connections, I can give support to the extent that I can, but at the end of the day, I have to trust that the people that I'm selecting and backing are making great decisions and, taking these businesses to the next level. So I don't get to go in and be the operator. I can only kind of coach from the sidelines.
Yeah. How about what your investors, what your LPs are telling you about, strengthening the firm and running? Are they telling you anything that's helping?
We have amazing LPs, and they have backed tons of kind of storied firms. And so we get a lot of advice. And I think that's one thing that is a plus for us, is that we are coachable. We know that, our experience is not necessarily in the venture space prior to running this firm. And so we really lean heavily on our LPs and getting advice from them and, bringing them into the room when we're making decisions and that type of thing.
If you add a new LP, maybe a bigger company, maybe NVIDIA, they says, okay, we're interested. Jewel, tell me your thesis. What do you tell them?
Yeah, we are investing in the building blocks of shared prosperity. We really believe that it's not a zero-sum game, that we can all win, and that technology can help us get to a better future. Yeah. And so, we think about technology and great ideas being available from entrepreneurs all over. And we are digging and finding in these pockets that everyone else isn't digging. So we believe that we're going to be able to achieve incredible outcomes and returns because we're looking where everyone else is ignoring.
Normal investment about 3 to 5 years for you, or are you going further?
We are underwriting every investment for a 10-year period.
10 years.
So we expect, because we're investing at the seed stage, that it's going to take companies somewhere in the neighborhood of 7 to 10 years to get to an exit.
Take me back to your childhood, right? You grew up in Nashville, Tennessee. And I know you've always given your grandfathers credit for their inspiration. One was a farmer. The other one was an entrepreneur who opened various businesses, including a laundromat, right? I found it very interesting.
Jules Laundromat.
Absolutely. Yes. I mean, people still need laundromats, right? I mean, it's a necessary thing in certain communities. But what was it like for you growing up in Tennessee?
Yeah, I had a great childhood, and I grew up in business. My parents were entrepreneurs, grandparents entrepreneurs, so I like to tell people I got it honest. I feel very fortunate that both business and education were stressed in my family. I grew up in an HBCU family. My parents and grandparents all graduated from HBCUs, and so I had a great childhood, and I have a lot of reverence and gratitude to my family for really instilling core values in me that I'm taking now into my work.
Yeah, when you weren't learning from your parents that entrepreneurial spirit, when you were just sitting on a Saturday watching cartoons, right? Take me back to that child. What were you looking at? What was your favorite cartoon back in the day?
I wasn't a big cartoon kid.
What?
Okay, this is funny. My mother was very big on, she wasn't a big toy mom. I didn't have a lot of toys growing up. I had African American history trivia. That was what I grew up with. So you ask me any trivia question, I probably know the answer. But I love
Matthew Henson?
Explore.
I love that.
Yes. We could do that all day.
Yes, I love the trivia. I love it. Yeah.
But I love to read growing up. I love to draw and paint. I was an artist. If you wanted to find me, I would probably be in my room drawing and painting or reading.
Yeah, I love that. Listening to Brandy, sitting up in my room.
Yeah, I was a Brandy fan.
Of course,
for sure.
everybody was. Everybody was. And then you went on, you graduated from Harvard University in business administration. Howard, not Howard University. You graduated from Howard, that's right. Graduated from Howard University with a business administration. Why did you pick Howard?
So in my family, HBCU was non-negotiable. Okay. So it was just, which HBCU am I going to go to?
So no Harvard, Howard.
Howard, yes. And my parents went to Tuskegee University. And so my mom wanted me to go to Hampton because that's a sister school to Tuskegee. But I had my eyes set on Howard because I wanted to be in a bigger city. I had gone to some summer programs at Howard, and I loved the campus, loved the vibe. So I was set on going to Howard. I was fortunate enough to get a scholarship to go. And so that was the end of the discussion.
Yeah. How were you as a student at Howard? Were you like into the books, or did it have to take you time?
No, I was 4.0 student.
Really?
I was very serious. No, I was very serious about the books, and I did student government, and I worked, and I had internships and all of that, but I was very studious.
Yeah. Coming out of college, who was Jewel? And I only ask you that because, today you have a lot of young kids coming out of college who are finding it very difficult to enter the workforce. AI is impacting that. And then, you have certain maybe carryover from the pandemic where the social skill set isn't there, right?
Yeah.
What did you do to get into the workforce? Like, what's trait helped you the most?
Yeah, I was set on internships from the day I stepped foot on campus. I was focused on what was going to be my freshman year internship. I interned at Goldman Sachs, so got the Wall Street experience. And then following that summer, I interned at Google and fell in love with Google and technology, so much so that I decided I wanted to graduate from school early so that I could go ahead and start my career. So ended up, going to Google after my junior year and starting there. So I kind of knew from, early days at Howard that I wanted to be in the workforce. I wanted to get some experience. I knew ultimately I wanted to become an entrepreneur, but I wanted to get some hands-on experience first. And I thought, what better way to start my career than at a company like Google?
Yeah. Is that what you would advise young kids now? Hey, listen, get to an internship as quick as you possibly can so you can get integrated with the company?
For sure. I think getting that experience early on, understanding what you like and what you don't like, making connections, building relationships is so important.
Yeah. And one thing that was very interesting about your journey is that, you also pivoted outside of what you knew, right? Because you were working at Google and then you found yourself having to go work at McCaster & Carr, right? Which is an industrial equipment supplier. And this is where you kind of learned that you can be your own entrepreneur because you went ahead and developed ParkPick.
Yes.
Get into that in a minute. But what advice would you have for those climbing the corporate ladder when they may find themselves having to pivot outside of what they know?
Yeah, the lesson in that for me was having a very clear understanding of my priorities. The reason I went to work for McMaster-Carr is because I wanted to be closer to my family.
Yeah.
And so I wasn't, at that point in time, I knew that if I wanted to go back to Google, I could always go back to Google. But for me, the most important thing was getting close to my family. And I got an opportunity in Atlanta, which was much closer than California to my family. And so I think understanding your values and understanding your personal priorities, what's most important to you at any given point in time, that can help guide you in terms of making the right decision. And for me, at the time, it seemed like a wild decision to leave Google, but it was the exact right decision for that time in my life. And it led me down the path to starting my own business.
That's right, because you find Park Pit, right? Because you were trying to help your granddad find a part on his tractor, his farming tractor. And how did you fall in love with solving this problem, right?
It all goes back to my grandfather, because I saw what he was experiencing in terms of not being able to find this part, which seemed like a small thing, but it was actually delaying the harvest, and like that has impact. And I was really set on finding this part for him, and that opened this can of worms of me thinking about, oh, well, if he's having this problem, there's millions of other people that are probably having this problem as well. And I just so happened to be in the perfect place to think about what could be a solution to this problem. And that just led me down this journey. And I'm a believer, and I just say, okay, this one step takes to the next step, to the next step. And yeah, it was a beautiful journey of building, learning, growing, finding great people to bring around me who knew more than I knew at that time about algorithms and computer vision technology. Shout out to Dr. Nashley Cephas, who was my CTO. And we built something amazing, especially for that time. We were really ahead of our time when it came to artificial intelligence, computer vision technology, and yeah, we built something that was attractive to Amazon, and now the rest is history.
That's right. Yeah, sold to Amazon in 2016 after you went on ahead and raised over 1.5 million. You did.
Yeah, over 2 million.
And so very interesting. And then you were so in love with that problem that when you sold the company, you were depressed in bed, right? You couldn't get out of bed because you just were so used to running the company. When it sold, it was like, I got this money, but what do I do now?
Yes. I think it was less about the problem itself and more about the fact that I had a certain goal that I wanted to hit. I wanted it to be $1 billion exit.
Yeah, they all do.
Yeah.
They all want $1 billion exit.
Yeah, but and also my identity had become so wrapped up in being the CEO of Park Pick that I didn't even know who I was without that. And so it took me some time and healing really to understand that I'm a person and a great person even without being the CEO of that company. And actually investing is kind of part of the reason or part of what took me out of that depression.
Yeah. What's Jewel Burks Solomon's biggest failure, and what did you learn from it?
That's tough for me because I think every experience that I've had has been a learning experience and helped me become stronger for the next experience. So I can't really think of anything in my life that has been a failure. I think that I have had hard knocks, I've made mistakes for sure, but everything has been preparation for the next thing.
Yeah.
So, yeah.
Can't pinpoint anything. Let me know if it is, though. I always love to see what people are learning during those times of downness and when things aren't going right. You know what I mean? It's when your back is against the wall and all the cards are moved. It's like you tap into a whole new entrepreneur spirit at that point.
Yeah, but I think I have fight in me, so it doesn't feel like a failure because I always figure it out.
Yeah, that's true. That's true. So if someone was ready to start a VC's firm in 2025, right? I had Melissa Bradley on the show. I don't know if you know her.
Yeah,
she says, too many people start a VC firm. Some of them need to get out, okay? They're messing it up for everybody else. But still, you may have an entrepreneur who may want to follow your lead. You may be working at your firm and says, hey, I want to do this on my own, Jewel. What advice would you give them about starting a VC firm?
It's a hard road. My biggest advice, practical advice, would be to make sure that you have plenty of money saved up because it's not very lucrative in the beginning. And I think people may get into it thinking that you're going to make a lot of money, and hopefully you will make a lot of money, but it's a long game. We're betting on carry is how we're going to make our money. And so I would say really make sure that your personal finances are in good order before you set out to start something.
And if an entrepreneur has a great idea and they're looking for some money, and why should they accept any from Collab Capital? Why should they go and have you as an investor?
Yeah, we're going to be your best partner. We've been in the trenches before. My partner and I, Barry Givens, we both built businesses. That's how we know each other. We were office mates side by side at Georgia Tech's incubator, ATDC. And so we know what it is to be at that ground level, first few employees trying to figure it out. And we still have that same work ethic. So we are the first call for many of our founders that we've invested in. We are there because we know what it is to be building at the early stage. And so I think that's why most people do want us on their cap table, because we understand what it's like to be a builder. And because we are fully opening up our entire Rolodex to our portfolio, making connections for them, helping them with hiring, go to market, whatever they need, we're there.
Yeah, love that. Get you out of here on some fun stuff. First $1 million. I know you made $1 million in your career, Jewel. I know you did. How did you spend it? How did you spend $1 million?
Really investing in businesses.
Yeah.
That's been my guilty pleasure, supporting my family in business endeavors and investing as an angel investor before I started Collab.
Supporting family and giving them money?
Yeah.
Man, that's dangerous.
I have an entrepreneurial family. No, my family is amazing. My mom and I have a gym in Nashville. I have a car wash with my dad in Mobile. So yeah.
Car washes are really, really underutilized.
Stable.
Yes, they are,
Yes.
right? When it gets a sunny day outside and your car is dirty, the line is packed, right? A lot of private equity is getting in behind car washes.
Yep.
I love that you said that. When you hear the phrase agentic AI, what comes to mind?
I try not to be fearful of what's possible. I'm more so lean into curiosity about what we can do, what it enables, how it can help accelerate the businesses that we've invested in. So I'll say curiosity.
Yeah, love that. Biggest money management advice, right? You worked at Goldman Sachs as an analyst years ago, as a summer intern, right? You must know something, right? Give me your biggest money management advice.
I would say diversification.
Diversification.
Yep.
Love that. Simple and sweet. Diversify your money. Love that. Look around the world. Where does Jewel Burks Solomon invest in right now? What continent, what country, where? At
Collab, we invest in the US, but personally, I'm very curious about what's happening in Africa. I'm doing more there in the future.
Yeah, everybody says that Africa is a place to be. Nigeria, a booming continent right now.
Definitely.
Top 3 books that inspire you to perform your best or motivate you.
I will give a shout out to my good friend, Dr. Key Hallman, who I think you interviewed. No One is Self-Made.
Yep.
Her book came out this year and it's excellent. I also think The Power Law, Sebastian Mallaby. Anyone who's interested in the venture capital space, that's a great book that helped me kind of understand the business that I'm in. And recently, I just read a book by Cheryl McKissick, the Black Family Who Built America. That is really inspiring to me. Her family did a lot of work in Nashville, where I grew up. And so just reading about the legacy of that family and all that they've built has been really inspiring.
Yeah, great, gotta get that book. Good to Great, get you out of here on that. My favorite business book from Jim Collins, Good to Great. What's the difference between a good entrepreneur and a great one?
I think a good entrepreneur has vision. A great entrepreneur has vision and the ability to fully execute the vision through deep study and focus.
Love that. Well, listen, next time I'm in Atlanta, okay, I want to fall in love with a problem, and then I'm going to come to you to get some money so I can start the business.
Okay.
Right? Just make sure you're favorable on the rates. Just, you know what I mean? That's it.
Okay.
Jewel Burks Solomon here at the NASDAQ. Thank you so much for making the trip back in the Enterprise Zone. Thank you for watching it. Thank you for listening.